Hello everyone and welcome back to the channel and a brand new video. So guys, imagine opening your 401k account one day to find not just the stocks and bonds, but the private equity, real estate and even crypto. It might sound interesting to you, who doesn't love a shot of the higher returns. But what if I told you that this is a dangerous invitation disguised as an opportunity? So, today we are diving deep into a sweeping executive order signed on August 7, 2025 by President Trump, one that clears the way for alternative investments to enter your everyday retirement plans. So, guys, get ready. This isn't just a financial plan, it's a high stakes game with your retirement on the table. So, guys, let's rewind a bit. For decades, 401k plans have been governed by prudence. That is, funds must be highly transparent, liquid, and low cost. Think index funds and bonds. Now, alternative investments like private equity, private credit, crypto, real estate were technically permitted but rarely used. Why? Because they are opaque, illiquid, and costly. Administrators feared both financial risk and legal liability coming with these instruments. Fast forward to today, when the executive order instructed the Department of Labor and SAC to revisit the regulatory guidance, effectively lowering the barriers to including alternatives in defined contribution plans. So there was a massive shock. Leaders from firms like BlackRock and others are already preparing the products to tap into this colossal $12 trillion retirement market. So, what happens next? Now, what is the future of the retirement investments? First, agencies like Labor Department and SEC will issue the new guidelines, perhaps over the next 6 months, to clarify when and how alternative assets can be included in 401k exercises. Expect plan sponsors to start piloting offers, especially in target date funds that can mix private equity with traditional index funds as a retirement nears. But guys, here is where the drama kicks in. Private equity and crypto are notorious for high fees, often charging over 2% plus profit sharing, far above the low fractions of a percent you pay for a typical index funds. And then there is illiquidity. These investments don't trade daily, so you and your money could be stuck for years without the real transparency. Meanwhile, crypto brings its own volatility and regulatory uncertainty. So, guys, what do I think on this? So, if I say genuinely, I'm excited by the promise of diversifying retirement portfolios beyond the usual suspects. But I can't shake a groaning unease. Retirement savings should be safe, reliable, and not experimental. Who truly benefits when plan participants can chase flashy gains but risk disproportionately high fees and lockups they don't understand? And if the things go south, are plan administrators exposed to these lawsuits or worse, are investors trapped in poorly performing and opaque funds? We have seen institutional investors backing away from private equity due to the disappointing returns and liquidity squeezes. Now we may be handling those same challenges to everyday Americans. So, guys, that doesn't feel like progress. It feels like rolling the dice with people' futures. So, guys, that's it for today. So, is private equity in 401k a bold democratization of investment or a risky experiment in your employer's name? So, there is no denying the game is changing. So, we will watch how regulators craft new rules, how firms roll out the products, and how fiduciaries navigate their new terrain. So, guys, stay informed, ask tough questions, and always remember your retirement isn't just your future, it's your right to protect it. Thank you for spending time here today. If this stirred something in you, hit like, subscribe, and let's keep the conversation going. Also, know your thoughts in the comment section. And thank you so much for watching, and I will see you guys in the next video.